All right, let's dive right in. We're looking at this really complex picture for Bitcoin and honestly the entire financial market right now. It feels like we're caught in a tug of war. On one side, you have this classic, almost predictable bull cycle signal. But on the other, a potentially massive macro crisis is looming. So the big question is, which one is going to win out?
So for years, right, there's been this simple, almost seasonal pattern to Bitcoin's price. You know, the predictable 4-year cycle. But now we've got all these new players in the game, these huge institutional investors, the ETFs. And it's got everyone asking that classic question, is it really going to be different this time?
So here's how we're going to break this all down. First, we're going to look at that historical bull case, the argument for why the good times should keep rolling. Then we'll pivot and explore this potential storm that's brewing, not in crypto, but right in the heart of the traditional financial system. And to wrap it all up, we'll dig into what the actual on-chain data is telling us about the market's health right now. Okay, let's kick things off with that historical cycle. We're pulling from a really fascinating analysis by a firm called Matrixport. And their whole argument, it's that despite all the noise and all the new developments, history still holds the key. Yeah, Matrixport's core argument is actually super simple. They say that even with a totally different kind of investor in the market now, these deep-seated market cycles, they're kind of like the seasons. They just tend to repeat. And they're betting that the underlying rhythm of the market is still very much intact. So, if that rhythm holds, where does it point? Well, based on their model and looking at the average growth from the last 3 bull markets, Matrixport came up with a pretty eye-popping number. They forecasted a potential peak for this cycle right around $125,000. Now, that's a bold call for sure, and it's based entirely on the idea that history is going to repeat itself. Okay, so if history is pointing to this nice, clear path forward, what could possibly get in the way? Well, this is where things get interesting, because historical patterns are definitely not guarantees. There's a major external threat looming on the horizon that could throw a wrench in the works for, well, not just Bitcoin, but for all financial markets. It could potentially derail this whole cycle. And here's the crazy part. The biggest risk we're facing right now, it isn't coming from inside crypto, not at all. It's actually a potential rebellion that's brewing deep, deep inside the US Federal Reserve. So the analysis lays out this whole timeline of events that could just spark chaos. We're talking about unprecedented infighting over interest rate policy. It all could come to a head in 2026 with the appointment of a new Fed chair. If that person is seen as too political, well, you could see open clashes with other members who are trying to keep the Fed independent. It could get ugly. Now, at the very center of this risk is a part of the financial system that's absolutely critical, but most people never even see it. It's called the repo market. The best way to think about it is like the overnight plumbing for the entire financial world. It's where banks and big institutions go to get super short-term loans. And the one thing this market needs, more than anything, is stability. So you can imagine, if interest rates suddenly become unpredictable because the Fed is fighting with itself, that whole system could just freeze up. So why should you care about some obscure market's plumbing? Well, because of this number. Somewhere between $1 and $2 trillion. That's the estimated size of something called the basis trade. It's a hugely popular strategy for hedge funds, and here's the key. They borrow massive amounts of money in that repo market to make these trades. And the whole thing only works if their borrowing costs are stable and predictable. You see where this is going? This is where you can really see the potential for a domino effect. It all starts with the Fed fighting amongst themselves. That creates unpredictable interest rates. Suddenly, that $1 to $2 trillion basis trade becomes unprofitable, and all those hedge funds are forced to unwind their positions fast. And that means forced selling of bonds on a massive scale, which could trigger a multi-trillion-dollar crisis, something very similar to what we all saw back in March of 2020. Okay, so with that massive macro risk just looming out there, let's zoom back in. Let's get back to Bitcoin itself and see how it's actually holding up right now. For this, we're going to turn to the latest on-chain report from Glassnode. Check this out, 6.7 million. That's how many Bitcoins are currently being held at a loss. I mean, the people holding them paid more than what they're worth today. At 6.7 million, that is the highest level of unrealized loss we have seen this entire market cycle. It's a huge signal that a big chunk of the supply is under some serious financial pressure. And when we dig into who's actually holding these bags, we see who's feeling the most pain. It's the short-term holders. The people who bought in relatively recently. They make up the majority of those coins that are currently underwater. And this group, they're the most likely to sell the second the price gets back to what they paid. It's like they're just waiting to hit the break-even button. And that creates this constant selling pressure from above. And that right there is really the core problem for the market at this moment. It's like a scale that's totally out of balance. On one side, you have this really strong, persistent headwind from sellers who are just desperate to get their money back. But on the other side, there's almost no supportive buying to push back. The demand we are seeing is weak, it's tactical, it's not that sustained, confident buying you need to really kick off a new uptrend. So, what could possibly break this stalemate? Well, there's one key date everyone's got their eyes on, December 26th. Right now, there's a huge concentration of options contracts that are basically acting like magnets, pinning the price in a tight range and squashing any big moves. But once those options expire, those forces just disappear, and that could finally allow the market to make a much bigger, more decisive move, one way or the other. Okay, so with all of that in mind, where are the key battlegrounds? What are the lines in the sand that traders are watching? Let's take a look at the specific price levels that could signal which way this market is about to break. All right, here are the 3 critical zones you need to be watching. First up, on the downside, you've got support around $81,000. Think of that as the true average price for the whole market. If we break below that, things could get ugly fast. Now, to the upside, the first hurdle is around $95,000. Getting above that would be a great sign that the sellers are finally running out of steam. But the real final boss is up around $101,500. Why? Because that's the break-even price for all those recent buyers we talked about. It's a massive psychological wall. So ultimately, the market is just coiled up like a spring between these incredibly powerful opposing forces. You've got the historical cycle saying up, a really fragile on-chain picture, and this terrifying macro risks just waiting in the wings. It leaves us with this one final crucial question. With the market this fragile, will the next big move be sparked by a fresh wave of enthusiastic buyers, or will it be the final exhausted sigh of the sellers finally giving up? If you found this video helpful, be sure to smash that like button and subscribe so you don't miss your next daily edge. More news in our Telegram channel in the first comment. See you next time.